Okay, we're just going to do a quick run through of the top 5 charts of the week. This is the weekly selection of charts that send out to subscribers of the website. Starting off with EMFX Spread. So this is emerging market currencies against the US dollar. The black line is an equal weighted index that I've created, and that's based on 25 different currencies for emerging and frontier markets. And the red line there is 200-day moving average breadth. So if you think about the breadth measures that we commonly use in the stock market, this is basically the same concept but applied to the foreign exchange market. And you can see there that it provides fairly similar kinds of signals in terms of being oversold, overbought, and just generally gives you an overall feel for what's happening in the market. So whether a big drop in the index is being driven by broad weakening, which it is fairly broad breakdown in breadth there, and you could argue that it's at sort of oversold levels at this point, but then again, when it gets to oversold levels, can easily get more oversold, as we saw during the big breakdown in 2015. So this is one of the key risk areas, certainly for emerging markets, as the US dollar gets stronger on the back of Fed tightening and other things that are going on in emerging markets, such as slightly weaker data. Next one is global equity relativities. So this is the sectors which are winning, or the styles. So momentum, I guess you call that a style, growth versus value, cyclicals versus defensives. And you can see that there's been this parabolic run, kind of similar, not the same magnitude, but similar to what we saw at the peak in 2000 dot-com boom, and kind of similar, not exactly similar, but the same, but similar to what we saw in the lead up to the just before the financial crisis. So that's why I'd highlight this one. The parallels to 2000 and 2008 pretty striking. Number 3, portfolio cash allocations. So this is showing you in the black line the AAII survey of portfolio allocations, and basically that has rebounded from the January lows, but still basically around cycle lows. And you can see, this is usually what we see, towards this point of the cycle. So, it's one of those kind of background features, almost like valuation in a way. But it just goes to show that investors are, you wouldn't call them fully invested, in that it's still around 15 to 20%. But relative to average, they're fairly fully invested. Number 4, this is capex, capital expenditure growth, business investment, basically for some of the key sectors of the S&P 500. So the black line there is the average across all industries, excluding commodities. And then in the blue line there, you've got energy and materials, and you can see, there's been a big sharp rebound since commodity crash sent that into the ground. And technology has been going pretty solid as well. So this is a pretty key chart, really. And if you tie that in with potential, maybe potential for some sort of infrastructure plan, maybe after the midterm elections later this year, you combine private capex boom with infrastructure spending, and could even see some sort of investment boom in America. Something to think about. Probably a bit too premature to kind of call that, but something to have on the radar. And the last one, back to emerging markets. This is showing the forward 10-year returns, price only, on the black line, and it's against the PE10, so price to trailing 10-year average earnings. And there's a fairly good link between it, so why would we care about that? So if you look at where it is at the moment, just under sort of 15 times there, that tends to correspond with just over 10% forward 10-year return. It's not as good as it was a few years ago. Note that I have actually inverted that black line just to line up with the logic there. So it's an interesting thing. The PE10 has serves as a decent rule of thumb for estimating the next 10-year price returns. It's not groundbreaking. I mean, most people know this, but it's interesting to have a look at it in the emerging market context anyway. So look, if you want to receive this email in your inbox, I'm going to put the link in the YouTube video description, also put it in the comments, and if you've got any comments, questions, let me know. Otherwise, subscribe to the channel so that you don't miss out on any future updates.